Vickers.
Thank you, Madam Deputy Speaker. I fully support the recommendations in the bill, and it's noticeable that it's a very wide-ranging set of proposals, and I'm not going to dwell on the more serious issues. They've all been very covered admirably by my honourable friend from Salisbury, the chairman of the Select Committee, and of course the former Chancellor. Mine is, I'm returning to the issue of access to cash, which has been raised by a couple of speakers up until now. It's not just cash, but I would argue the wider range of banking services that is actually crucial to our local communities. And proposals that have come forward affecting my own constituency in recent weeks involve the closure of what is in effect the last bank in the towns of Barton-on-Humber and Immingham. And I'm delighted to say that in one case, Link, who I've been working closely with in recent weeks, have designated the Barton, only the announcement came only yesterday, to be one of their next banking hubs. So that's slightly taken the sting out of what I was going to say. But of course, Immingham is still in urgent need of a financial hub, and proposals are being put together, and I'll certainly be taking those forward with the local community to Link. I think it's worth remembering that though we can listen to our constituents and hear tales of how reliant they are on their local bank and the services it provides and so on, we have to recognise that to some extent we are all guilty, of course, for the change in the use of branches. I suspect there's not one of us in the chamber at the moment who can't claim to have used a credit card or bank card to make a payment in the last, probably today even, when perhaps cash would have been a better option. So we have to recognise that, and it's very easy to sort of paint the banks as the bad guys, but they quite obviously have got to amend the services they provide. But it's interesting to note that more than 5 million people in the UK rely on cash on a daily basis, and 4 million adults, it is estimated, do not have access to a smartphone. 1.5 million households don't have don't have internet access. So whilst it's important that businesses make decisions in line with the general trends of customer behaviour, it's important that we don't leave behind those who are perhaps in the more vulnerable groups. I think I'm delighted, as I said earlier, that the Cash Action Group and Link have come together and announced that Barton-on-Humber will receive a financial hub, and that's great news. But I think it's important to note that, as I mentioned earlier, it's not just access to cash that is important. I do think that I urge the Minister and his team to actually think about the wider range of banking services, which up until now I think have been we've been more used to, certainly people of my generation, more used to face-to-face meetings with banks. Doing online transactions is fine, but doing online applications for what can be life-changing decisions involving a mortgage, for example, it's actually an important part of the service that our financial institutions provide, that they give us guidance and make us think about more seriously about the commitments that we are making. So I welcome all that the government are doing. As things stand, there's no existing legislative framework, and I think it's by guaranteeing a minimum level for access to cash and wider banking services, a single authority with overall responsibility for overseeing a cash system that works for everyone across the country. It's welcome that the government is seeking to address this through this bill, which will also empower the regulator to ensure that local communities continue to benefit from a cash withdrawal or deposit facility. I would also repeat the point that my honourable friend from Blackpool and Cleveland made earlier, that it should be free access to cash. I think one of the things that annoys me, and I'm sure many others, is that you're paying to get your own money. Yes. I do urge the Minister to insert that word into the legislation. I'm sure that would have cross-party support. So I think with that, Madam Speaker, bearing in mind the constraints on time, I'll say thank you to Link for the work they've done in respect of Barton on Humber. I appeal to them to take an equally sympathetic view when it comes to their decision about a banking hub in Immingham, and I urge the Minister to think about that additional word free that should be inserted into the legislation. Thank you.
Stella Creasy.
Thank you, Madam Deputy Speaker. In the time available to me, I don't want to disappoint my colleagues on the opposite benches, but I think they know the issue I want to focus on. But before I do, I just want to put on record my support for the comments of my colleagues on this side around the importance of credit unions. I speak as both a cooperative and Labour MP, and the importance of access to them, and indeed the issue around access to cash, which I think reflects the issue that I'm going to come on to, and particularly the areas around high-cost credit regulation. I also want to put on note some scepticism about the idea that there are wonderful opportunities as a result of Brexit. To my mind, there are simply problems that we will need to address, and I note that the former Minister talked there about the unlikelihood of a derogation very much from the existing regulations that we'll find. Some may want to wonder if that's the best use of parliamentary time, but I'm willing to look at the legislation. Where I come to at this debate, and I think there is a genuine philosophical disagreement here about the concept of consumer protection, and it is the lesson of high-cost credit regulation in this country that I don't think this legislation learns, and it is our constituents who will pay the cost. Let me start by pointing points of agreement. I agree with the member for East Hampshire when he talks about this as an industry that is shape-shifting, that it evolves to meet the times that it faces. Let me also put on record my appreciation for the work of the former Minister. He and I have had many discussions about this industry and how best to address the threat that they pose to our constituents. Whilst we may not have agreed all the time, I have certainly respected the fact that he's been listening and looking at the evidence. But I am here today as a Cassandra, a broken record, to warn again of these industries and the latest antics of these companies, and in particular the buy now, pay later lenders. Those lenders who 2 years ago we started to say must be regulated, and I would argue that was probably 18 months too late from recognising the threat that they are. The lessons of payday lending, of guarantor lending, of hire purchase agreements show that we simply cannot wait until the harm is evident amongst our constituents, when the abuse that is coming is self-evident already. Now that we are in a cost of living crisis, such caution is frankly unforgivable, because it is our constituents who are paying the price. And I hope that we can return to this in committee, and I'm sure that the Minister who's now dealing with this bill will recognise that in a country which is now owing £1.8 billion in personal debt, that is a rise of £62 billion. That has not come from nowhere. Credit card borrowing in this country has jumped at its fastest rate in the last 17 years as people deal with the cost of living crisis. When a third of households with children in are cutting back on food to be able to pay their bills, it does not take a rocket scientist to work out too much month at the end of somebody's money and mouths to feed means credit must be found. And our constituents are turning to the high-cost lenders in their droves. For those members who don't know what buy now, pay later is, I'm surprised that you don't, because it's on every single website in this country now as a result of the delay in action. It has vociferously exploded as a result of the pandemic and now the cost of living crisis. Those old companies offering the opportunity to spread the payments. But they don't do that out of the goodness of their heart. They do that because consumers spend 30 to 40% more. Add that toxicity into the way in which people are borrowing now to make ends meet. We are seeing buy now, pay later companies offering to put your energy bills on these processes. We're seeing them offering them not for fast fashion, which is where I think people originally thought this kind of regulation was needed, but for basic goods and essentials. Millions of people in this country are now using this form of credit, getting into a hole that they cannot get out of. Not my words, it is what the evidence is now showing us. And the previous minister as well will know that the evidence is there of harm. Indeed, that's what the FCA told us over 2 years ago now. The average buy now, pay later user is paying off £293 of buy now, pay later debt. But that's at current prices, with inflation rocketing it the way it is. The only ones who will win from that are those who offer you the ability to apparently spread the payments, but simply to get into further and further debt. Most of these companies will not be clear with their lenders about the consequences. Indeed, a lot of people don't even realise that it's a form of credit. They just think they're spreading the payments on the websites. Shoppers were charged £39 million in late repayment fees on buy now, pay later loans last year. I dread to think what it is now. There is agreement across this House that we need to regulate these companies. But what there isn't is the political will to make sure it happens before the pressure points come. We've already been through one Christmas where this happened, where £1 in 4 was spent on buy now, pay later. And there are now millions of people who are still paying off those debts. On the current regulatory timetable the government is talking about, we will not see action before sometime late next year. Minister, sometime next year is far too late for our constituents. I'll happily give way.
I'm very grateful. I can't resist. I think the issue is, and I do think there's a great consensus in the House on this matter, it isn't a matter of a lack of political will. I can assure the Honourable Lady it is about the complexity of delivering that legislation. And in fact, the intent now having been stated, it does have a really meaningful effect on market practices, and it will and is changing behaviours in the marketplace.
I thank the former minister for his intervention, but my question is, what does it mean for consumers? Because the lack of regulation means that my constituents cannot go to the Ombudsman to seek redress if they think they have been missold this form of credit. As people are drowning in buy now, pay later lending, they cannot seek assistance except from the companies themselves. And what are we now seeing? We're seeing mainstream banks moving into buy now, pay later. So the very bank who looks at your bank account deciding how much you can spread payments, how much more you can afford to borrowing, because it is a form of borrowing. So he may be arguing that the market is moving, but the constituents need help now, because it's now they're getting into those debts that they cannot get out of. And the challenge for all of us is that the pace of change is horrifically slow, and that's where the damage will come to our constituents. If we all agree that regulation matters, let us get on with it. And furthermore, let us make sure some of those basic agreements, like the Ombudsman, the ability for the Ombudsman to intervene, matters. And this legislation shows that most of all, because it was the intervention of the Ombudsman. The evidence is very clear with payday lending. The Financial Conduct Authority was overseeing Wonga when it continued to make loans that were unaffordable to its customers. It was only when the Ombudsman intervened that Wonga was finally held to account for its behaviour, and as a result, it went bust. And Wonga is not a one-off. So our constituents need proper consumer credit protection. Now, the Minister will know that my belief is a proper credit capping process for all forms of credit, so that we don't play whack-a-mole. And the member for East Hampshire, when he talks about shape-shifting, reflects that as one of these companies is regulated, another one comes up. But in the intervening period, it would be perfectly possible to bring in the Ombudsman, because if we set out a separate regulatory regime for these companies, what we're doing is setting out a precedent for other forms of credit to come and ask for separate, frankly special treatment. And what our constituents need is clarity about who to go to when they get into trouble. We will all tell our constituents to go to a debt advisor, but if they have rights, those rights need to be transparent. And at the moment, if people are borrowing on a buy now, pay later, they have no rights because it isn't regulated. They only have the indulgence of these companies. And again, asking turkeys to tell you whether Christmas is a good idea rarely ends in a present for anybody. It is right that we act as quickly as possible. I don't agree with the member opposite when he says that the political will is there, because frankly this could have been done a while ago. The fact that the timetable that the government has set out does not seek any form of actual intervention until sometime late 2023, and even then it's about consulting on further measures, simply won't wash. And I say to every member in this House who will have constituents who come to them of which buy now, pay later debt will be part of the debt make-up that they have, whether they've put their mortgage on it, because again, there are companies offering you that opportunity of spreading payments. Little wonder why the government, after all, is telling us that they're going to spread our energy bills. What the government proposals come up to date are a buy now, pay later form. I wish I was wrong. I wish I was wrong about pay-late-lenting, but we waited too long, and there are still millions of people in this country who are owed money as a result of the compensation scheme from these payday lenders because we waited too long to intervene. We must not make the same mistake again. So I put the Minister on notice, and I asked across the House, because I don't think this is a party political issue, it's about the pace of change. Proposing an amendment to this legislation will give the government the same time period that the buy now, pay laters give our constituents of 28 days to bring in that secondary legislation and give our constituents the protection of the Ombudsman is a necessary and vital measure in a cost of living crisis to make sure that when people who cannot choose between eating or heating because they can't afford to do either are turning to buy now, pay later, they are not creating further problems for themselves down the road. I know members across the House agree this kind of lending is a problem, but it's time for clarity, it's time for simplicity, and it's time for that legislation. I hope I will find supporters on the opposite benches. I know we will find supporters in the other place, but above all, I know our constituents deserve better.
Dame Andrea Leadson.
Thank you, Madam Deputy Speaker. I'd like to start by just paying huge tribute to my honourable friend, the member for Salisbury, who, after 4.5 years as the Economic Secretary to the Treasury, achieved an enormous amount. And this bill, I think, is testament to his huge commitment. And it was a pleasure dealing with him on so many issues over that period of time. And as a former, having done his job briefly for 1 year, I can absolutely understand what a huge commitment it's been for him. But I'm also torn because I absolutely love the new minister, who I've worked with as a backbencher on many issues in finance. So it's great to be in the chamber and able to contribute to this. So enough of the nice stuff, Madam Deputy Speaker. I think this bill is essential. I think this is one of the big areas that there was so much nonsense talked about in the Brexit debate. You know, oh, the City of London's going to collapse. I remember once going to the Dubai International Conference where Xavier Bettel, the Prime Minister of Luxembourg, said, well, if the UK leaves the EU, then we'll just have the City of London will move to Luxembourg. And I remember thinking in my jet-lagged brain, surely you couldn't fit just over 1 million people in Luxembourg, and the queue for the coffee shop would go down the street. So there was so much nonsense talked. This is absolutely brilliant, and it's long overdue. It's time that we do take control of the City of London and its competitiveness. It is high time it had a competitiveness objective, and that we actually do what we have this perfect opportunity to do, and that is to be the leader in the world in setting out financial regulation and actually in exporting to countries across Asia where people can't get mortgages, they can't get insurance, they can't get all of these sorts of policies that we take for granted being able to buy and regulate in the West. So actually leading regulation around the world in finance is absolutely critical. I also think that the other huge opportunity for the UK is in being the world's leading green finance centre. And my first question for the Minister is, what are we doing about that? Is that in this bill? Because actually, in my view, it will happen. I think that the green industry is going to be an even bigger employer, an even bigger jewel in the crown than the financial services sector in the future. But I'd like to see us seizing this opportunity to make that happen as soon as we can. And secondly, of course, mutual recognition agreements, absolutely vital. And having left the EU, we've got the freedom to do that. But I would like to know from the Minister, how will those MRAs be scrutinised by the House? A technical question. I'm sure there already is an answer to that. And then moving on away from competition, which is at the heart of this, absolutely vital. But moving on to payments, I certainly recall from days on the Treasury Select Committee in 2010 to 2014, and then as City Minister myself, how dire our payment systems are, mainly because they've been around for such a long time and they've been held together and strung together with string and sellotape and sealing wax, and a lot of the fraud that goes on that someone slightly bravely said we should feel sorry for the banks over. Never feel sorry for the banks, but nevertheless, it is, something of their own doing is that the ancient payment systems are still very, very clunky, and a lot of the fraud that we see today is as a result of payment systems not being fit for purpose. And again, I would like to understand from the Minister whether there is a requirement anywhere in this bill to improve the payment systems themselves, to make them more robust, to have the banks, the clearing banks in particular, investing in those systems. And then in particular, with new digital currency regulation, how will this interact with fiat money regulation, and what protections will there be for those who unfortunately, perhaps not yet, but in the future will become the victims of scams in the digital money space? How are we going to protect those by fraudsters who will claim, oh, well, I'm regulated by the Bank of England or the FCA? What are we doing about that? Is that being written into this bill? My third area of questioning to the Minister is around access to cash. Back in the day, the big banks, after the financial crisis, wanted to ditch cheques, for example, because they couldn't see the point of those, expensive to administer. When, of course, we, with our constituents, know so many people still to this day rely on cheques. And just recently, my daughter was sent a cheque and was trying to cash it. You literally can't do that unless you go into a bank without, filling it in, taking a photo of it, sending that to the bank, sending it off in an envelope with a stamp, blah, blah, blah. Absolutely ridiculous. There are still so many people who depend on cheques. So what are we doing in this bill to continue to protect access to cheques and, of course, as others have said, access to free cash through ATMs? Those are disappearing at a rate of knots, and whilst as last bank in the town started to close, the post offices have picked up a lot of the slack, but that system is waning, and certainly for small businesses, a lot of the services they need are not available through post offices, and of course it's very difficult to open a new bank account unless you're digitally savvy, other than going to that branch, which can be difficult for older people. So my final point, Madam Deputy Speaker, is about credit unions, and I'm a big fan, always have been. What I love about them is that they teach you to save before you borrow, and like many cooperatives, credit unions have been great at reaching out to schools, teaching young people about the importance of saving and about the fact that money doesn't grow on trees, and so you get into the habit of saving your pocket money before you go out there and start borrowing money for anything. So I would like to know, as has been mentioned before, a lot of government money went into helping ABCUL to create a new proper platform for credit unions. How are they doing? How is the cooperative movement doing? Is there anything in this bill that is really going to support not just those cooperatives, but also vitally financial education in schools? And I'd just like to finish up by saying that it seems to me, whilst financial education is on the national curriculum, it would be so much more valuable to so many young people to know how to open a bank account, what a rental agreement's about, how to fill out a mortgage form or a tax return or a credit agreement, rather than more geometry and the square root of 9. Thank you, Madam Deputy Speaker.
Nick Smith.
Thank you, Madam Deputy Speaker. I'm glad to see the introduction of this bill. It's provisions for securing access to cash, which I think should be free, will be welcomed in Blaenau Gwent. Can I strongly endorse Chapter 3's focus on the improving accountability of financial regulations? Now, which magazine have described this as a once-in-a-generation opportunity to strengthen the UK's financial services regulatory regime? Quite a mouthful, Madam Deputy Speaker, but I think much more needs to be done still. Unfortunately, I've lost confidence in the main regulator, the Financial Conduct Authority. Their oversight of the British Steel pension scandal was plain hopeless. I saw the stress and grief of steelworker pensioner constituents who'd been ripped off, and my own experience as a member of the Public Accounts Committee, just how useless the FCA can be. Despite being duty-bound to ensure consumers were given quality financial advice, the FCA displayed poor oversight of the advisor marketplace. They consistently failed to act, even though they were aware of the risks to pensioners transferring out of a defined benefit scheme. They failed to regulate a marketplace rigged against the steelworkers. Now, a recent Public Accounts Committee report found that the FCA failed to protect BSPS members from unscrupulous financial advisors who were financially incentivised to provide unsuitable advice, and the regulator was, quote, behind the curve in its response. As a result, after much prodding, the FCA itself found that staggering 47% of transfer recommendations were unsuitable. This has meant that many BSPS members have suffered years of nagging worry, losses to their pension pots, and had their plans for their retirements ruined. Now, of the claims made to the Financial Services Compensation Scheme, the NAO discovered that the average individual loss stands at an eye-watering £82,600. Due to the FCA's failures, the final bill for the coming redress scheme will likely be in the hundreds of millions of pounds league. Also, despite having powers to respond to the thieving and poor advice behaviour, the FCA has issued just one fine in relation to the PSPS case. So whilst I welcome the FCA's efforts to improve its consumer-facing work in recent months, I'm not convinced that the proposed framework will ensure consumers are properly protected in the future. It is good that the Treasury will have increasing powers to direct the FCA to make, review and enforce new rules as and when the need arises. The Treasury does need to jump in when necessary. However, we need a fit-for-purpose FCA that robustly defends its consumers at the outset. It needs to hold bad actors to account from the get-go. Therefore, Madam Deputy Speaker, I believe that consumer protection should be embedded much better in Chapter 3 of the bill as a key accountability of the regulator. That is why I hope to see amendments to this bill that mandate a much sharper focus on consumer protection, with statutory panels that centre on the consumer, and at committee there should be a review of the FCA's enforcement powers. They may well need boosting. Now, confidence in the regulator to have the best rulebook, enforcement and a culture which stands behind the consumer is key. Financial sharks that rip off working people need to be netted. The FCA needs to look across our country as well as at the City of London. Therefore, can I ask the Minister to make doubly sure that this bill has the strongest possible provisions for consumers, that the regulatory culture at the FCA is fit for purpose, that something that's much more Securities and Exchange Commission than the limp enforcement regime seen at the FCA right now. Now, experience shows that the FCA Consumer Panel needs the firepower to challenge the culture at the FCA. Will the Minister please look again at this topic? Finally, Madam Deputy Speaker, a strong consumer voice must be at the heart of all our financial regulators. This needs to be a fundamental guiding principle. Thank you, Madam Deputy Speaker.
There we go. Pauline Latham.
Thank you, Madam Deputy Speaker. It's a great honour to be able to speak after those people who are interested in cash, access to cash. For many people who do need it, they can't exist in this cashless society. So I intend to speak very briefly in relation to clauses 47 and 48 of this bill, because these clauses aim to put on a statutory footing some of the best conclusions of the Independent Access to Cash Review from 2019. The Cash Action Group is already carrying out very important work ensuring that those who need or want access to in-person banking services will continue to have it. And I support the clauses 47 and 48 because they will encourage this activity, put it on a statutory footing and regulate it. In Belper, in my constituency, the final High Street Bank branch, Lloyds, will close this November. This is very common and is happening all over the country as high street banks are closing their branches, much to the horror of the elderly population and many younger people, and particularly those existing on the breadline. However, there really are a significant minority of people in many communities, as well as in Belper, who still want or can only use cash and in-person banking. I think my right honourable friend, the member for Northampton South, was talking about her daughter having a cheque. What do you do with cheques these days? And many people do need access to a bank. And a survey I ran locally revealed that over 60% of respondents had used in-person banking services in the last month. Over 35% never use online or virtual banking. One option when high street banks take the commercial decision to close branches is to open shared banking hubs, where one day each week the consulting room is occupied by a different bank. Everyday businesses and individuals will be able to use the pay-in desk staffed by the post office to carry out everyday cash withdrawals and payments. And in Belper we have many small businesses who really need access to this service, to the point that the post office in Belper is overwhelmed by the numbers of people using it. And respondents to my survey overwhelmingly backed such a shared banking hub in Belper. I was delighted that yesterday it was announced that Belper will indeed host a shared banking hub. And I've been told that the data shows that such hubs increase footfall on the high street and improve cash practices for local businesses, and having knock-on effects well beyond simply providing cash and banking services to people. It is, in a way, a social service for some of these often very lonely people who will come into Belper for conversations with real people. They don't want to do it online, and I think particularly elderly people who can be isolated in their homes need this service so that there's a reason to go into town to actually go and talk to people. And I think it's such an important thing to happen. But in addition, these banking hubs are going to be good for the environment. In my survey, over 50% of those who currently bank with a closing bank in Belper would have to use a car to get to their new nearest branch, whilst worryingly, nearly 20% told me they had no way at all of getting to a branch. Therefore, the shared banking hub will actively reduce the amount of traffic and emissions Belper residents use whilst doing their banking. And as Belper is a transition town, they are very keen to care for the environment. So I'm delighted for Belper with the success of this campaign, which I've run alongside local councillors. And I hope that shared banking hubs can be rolled out across the whole country, because I think they're the future. If it isn't commercially viable to keep a bank open 5 days a week, it is much more likely that they can keep it going 1 day a week. And this is where these shared banking hubs are really going to win out. So that's why I support Clause 47 and 48 of the bill today, which appoints the FCA as the lead regulator for access to cash and means the Treasury can designate firms to be subject to oversight for the purpose of ensuring the continued provision of cash and banking services access. This should encourage even more banking hubs in communities which do not currently have good access to cash or banking. And I hope that all honourable members and right honourable members will support this bill when we come to vote later today.
Sarah Hawley.
Thank you very much, Madam Deputy Speaker. It's a pleasure to take part in this debate. Firstly, I'd like to welcome the Minister to his position and wish him a long ministerial career. And also, as I say, a privilege to take part in this debate with so many well-informed backbenchers. This is a real feature, I would say, of this afternoon. The Liberal Democrats welcome this particular bill. Obviously, it's absolutely essential for ongoing regulation of financial services and markets in this country, and we very much welcome the majority of the provisions within it. As the member for Salisbury earlier mentioned, it's a very big bill. It's got, I think, 330 pages, and clearly the result of a great deal of hard work over many months for many individuals. But I have to say it is disappointing that, given the flexible nature of the financial services industry and the fast-moving nature of this particular sector, that perhaps this bill doesn't go further in anticipating some of the issues that we think we're going to be experiencing. And it was interesting to hear from the member for Walthamstow and indeed the member for Blaenau-Gwent about some of the issues that they are already experiencing in their constituencies, which of course not just confined to the ones that they represent, that this bill is not addressing. And I want to come on to a couple of those, because obviously the main part of this bill is to establish a new regulator. And the role of regulators is something that's actually come under the microscope quite a bit over the summer. We've seen, for example, that Ofwat do not have powers to stop sewage being pumped onto our beaches. We see that Ofgem do not have the powers to prevent massively increasing fuel bills for domestic consumers or indeed business consumers. I think that's come as something of a surprise to many of our constituents, that the role of regulators currently in this country is not perhaps as extensive as they thought. And I know that certainly many of my constituents will be expecting a regulator of financial services to have powers that go beyond what is provided for within this bill. I'm particularly concerned, I think, about the focus on competitiveness, and that's already been raised by the member for Brighton Pavilion and others, at the expense of other statutory objectives. And I do very much want to endorse what the member for Brighton Pavilion was saying about the importance of reflecting net zero objectives. And I do think this would be an excellent opportunity for the Minister, in perhaps his concluding remarks, to say a little bit more about that. The previous Prime Minister, for his many faults and failings, was a massive champion of the net zero agenda. We've heard some interesting signals from the new Prime Minister during the summer about her own approach to this, and it would be a really great opportunity for the Minister perhaps to get on record that the new Prime Minister, this new government, will have the same commitment to the net zero objectives, and to talk more about why we don't see those perhaps enshrined in this bill. But I think also what's really concerning my constituents is that we don't see consumer protection being as much of an important issue in this bill as the competitiveness strategic objective. And that is something that I think is really concerning, because we've talked a bit already this afternoon about fraud and scams. This is causing huge harm throughout our economy. I'm not going to say too much about cryptocurrency, but there's no doubt that the landscape of crypto offers unseen, untold opportunities for future fraud, and it's something that we've really got to get our heads around. It's causing huge harm to individuals, huge harm to our economy, and the current structures for tackling it are really not fit for purpose. I'm surprised when I hear from some of my constituents who've been victims of fraud. It is not just vulnerable people, it is not just people perhaps lacking education, it's not just older people who are not used to online banking. It is vast swathes of people. I'm often surprised by how very well educated, experienced professionals become victims of fraud. And it's clear to me that we are not sufficiently on the side of the consumer yet in tackling fraud. Yes, there's always an element of buyer beware, but the scales are being tilted too far in favour of the fraudsters, and we need to be doing much more to give people the powers to tackle that. So I welcome the measures to tackle push payments, but I would like to see a great deal more about fraud, because it's not just an existing and growing threat, but as I say, the prospect of future threat is enormous, and the onus is not just on the individual to protect themselves, because I don't believe that individuals have sufficient powers to do that. A further area of concern, it's been mentioned a great deal already, is the access to cash. Much has been said already, and in the interests of time, I will merely endorse what the member for Cleethorpes and the member for Mid Derbyshire have already said on this, and the member for Edmonton earlier on. Free access to cash. I just want to particularly emphasise that. Obviously, rural, remote communities have particular needs, but I think the member for Edmonton actually summed up very well. Urban constituencies also can be really poorly affected by this. We're very supportive of proposed community banking hubs, but currently their creation requires buy-in from the existing banks, and we need to see something that can be independent of that. Just to conclude, we very much, as I say, welcome the bill. We would like to see stronger powers on tackling fraud. We would like to see more on access to cash. But I think the point that was being made at the very beginning of the debate about the regulator The regulator's powers are granted by Parliament, and that is why it's so important that Parliament must have the powers to hold a regulator to account, and that is why the real weakness of this bill is that so much of it is being delegated to secondary legislation which won't have scrutiny, won't have oversight. As I've already said, financial services and their development, we want to be at the forefront of that. It is a very, very fast-moving sector. We have absolutely the skills and the experience in this country to really make that a key sector, continue for it to be a key sector, but it's absolutely vital that Parliament can have the oversight that it needs on both the set-up and the ongoing activities of the regulator, and that is really something that the bill needs to be strengthened to ensure. Thank you very much.
Most unusually, having imposed a time limit of 7 minutes, several colleagues have decided they don't want to speak in this debate after all. And therefore, I'm able, most unusually, to be able to extend the time limit to 8 minutes. Starting with Paul Maynard.
Thank you very much, Madam Deputy Speaker. What a lucky boy I am to have another minute to spend. Gosh. Can I start by referring to my entry in the Register of Members' Interest as a member of the Consumer Council for Link, who not only manage the nation's ATM network, but are also the overarching body looking at these new banking hubs. So it's important that people should bear that in mind when listening to my comments. I would pay tribute to the member for Salisbury if he was still here. Unfortunately, he's not, but he was always very patient as I would chase him around Westminster trying to ask about yet a further nuance on access to cash. I think one thing we've learned today, listening to members, is that really access to cash is the wrong way to talk about this issue. It's not just about cash, it's about access to face-to-face banking, and that's what those who are reliant upon cash, whether they are elderly or in financial need, they need to speak to someone about their financial situation and not just interrogate a computer. We've heard from very many people today just how reliant upon cash so many are, increasingly so given the cost of living crisis, the reliance that people have on using cash as actually a budgeting tool, a jam jar approach to how they manage their bills. The provisions that are in this legislation around access to cash should not just be seen as about ATMs though. We can't keep ensuring that we can spew out cash to consumers if they have nowhere to spend it. And the underlying problem is actually the economics of our cash system, the hidden wiring. And no one's mentioned today the provisions in the bill around wholesale distribution of cash. If it costs too much for a retailer to use cash, why would they keep accepting cash? They need to be able to deposit that cash in an ATM just as much as the customer needs to be able to withdraw that cash to spend it in the first place. Far better still would be to have more local cash recycling that avoids the need for banknote distribution nationwide anyway, if only for the environmental reasons. And we have to be careful not to accept the rather irresponsible narrative that somehow we are on a precipice of all ATMs disappearing. 94% of cash withdrawals are still from free-to-use ATMs. Link subsidises any ATM which was here in 2018, but no longer has an alternative within 1 kilometre. Should that ATM disappear, Link will fund a replacement. There is a strong backstop to ensure the presence of ATMs in our community. But as I said, the debate has moved far beyond ATMs towards that face-to-face banking, largely thanks to the Herculean effort of Natalie Seeney, who wrote the original Access to Cash review back in 2019. She has banged their heads together of chief executives across the banking sector to make sure that they move forward on these banking hubs, which, as we've heard today, are making such a difference in both Belper and in Barton-upon-Humber and in more and more places across the country as a whole. Link is doing a fantastic job looking at the already announced bank closures around the country and what is planned to identify where they are reducing cash access and access to in-banking face-to-face already. And where those gaps are appearing, they're working with the overarching company they've set up to fill those gaps in. They assess each closure, they recommend better cash services in places without any branch service left to be delivered by their dedicated operating company. Now, I know some have expressed concerns that there are slow rollout of these banking hubs. We've had 2 pilots already which have proved that they are workable measures. But when you have to factor in things like asbestos removal, finding the right location in any given community, from a sector that hasn't really had to act as a property developer in the past, some delay is perhaps understandable. I'd rather we got it right in each community than just rush to buy any old place and just hope for the best. The creation of an overarching duty for the Financial Conduct Authority is very much the icing on the cake for the work that has gone on so far. It should be seen as a reason for taking satisfaction. Those who are criticising the bill and the measures for not going far enough actually, I don't think fully understand what has occurred already. They need to recognise a win when they see one and embrace it. But there are some clarifications that I do seek from the Minister. I've sought one already, and he's been uncharacteristically reticent at the dispatch box in telling me what I want to hear. He's not really very good at telling me exactly what I want to hear. But now, he knows where I lurk early in the morning, most mornings, and I will be there tomorrow morning if he wishes to approach me over my morning coffee and whisper sweet nothings into my ear that he's heard my plea today. There is no point offering us access to cash. That access costs £2.75 at a cash machine in a cash desert in the poorest part of my constituency. That diminishes access of cash because they find it even harder to get access to cash if that has meant that a free-to-use ATM has disappeared. All of this is meaningless unless the word free is introduced into the debate. Secondly, I know the government's putting out its access to cash statement. Can you reassure me this will not just be some crude measure of geographical accessibility of 2 miles here, 1 kilometre there, whatever? Because that doesn't really reflect the need in the likes of Mitcham and Morden, where you have a very urban constituency, rather like mine, or the member for Dumfries who was speaking earlier, who has this vast rural area where 1 kilometre, frankly, might not mean much on the hills and moorlands of his area. I will, yes. I'll give you time to recognise.
He's making an excellent point about the kind of proximity of cash machines and those arbitrary limits, because I have the city centre of Glasgow right at the heart of my constituency, and then putting a couple of kilometres around that would basically knock out every other cash machine that wasn't on Buchanan Street. So I agree with his point and think the government should... Would he agree with me that the government has to think more carefully about such limits?
I very much welcome that. I think the challenge to the government is that this access to cash statement has to reflect what good access looks like, not just to cash but to these wider in-person banking services. And it can't just be about can I get a banknote out of a machine. I'm seeing an increasingly common in my own local area that I go to the cash machine, it hasn't been filled up. Not much point having a cash machine without any banknotes in it. It's rather a decorative antique object, if anything. One important feature which has not required legislation, but which deserves a great deal of comment, more than the 2 minutes I now have, is the right for a community to review any decision taken about whether or not they should have a banking hub. Not only is Link assessing any closure of a bank branch already announced, but there's also the right for a community to request a review of cash access. I'm sure every single member worth their salt in this place should be sitting down, looking at the map of their constituency and saying, I need a review there, there, there and there. I'm sure Link will not thank me for trebling or quadrupling their workload in this regard, but it's a fantastic opportunity and a mark of how far this debate has moved. The legislation, in my view, should specify a simple, fair and independent process that allows communities to appeal these decisions. This could easily be placed on the legislation as an additional duty for the FCA. This will help the communities, the banks and Link by ensuring a fair, independent and transparent method for communities who are not satisfied to have these issues quickly considered under the oversight of the FCA. There is a great deal of suspicion out there about the banks and their approach to their branch network. And I do not want communities to appeal, to ask Link to have a look and then be very disappointed as to why they don't get the banking hub that they might think they are entitled to. The process has to be clear and transparent for communities to have confidence in it. So in summary, the government proposals ensure that the FCA have the powers they need to tackle the issue of access to financial services. After many years, he's back now. He missed me saying well done to him, the member for Salisbury. Don't duck out for your starring moment. I don't know. But this has taken far too many years to solve. It's not his fault either. It's been very complex. Too many communities have lost the banks they already had. Too many have been reduced to a single bank or no bank at all. We now have a robust process in place to identify these locations, to find an alternative, to find a solution without people having to drive miles away. For that reason alone, the bill is to be welcomed, but it can be improved with one single four-letter word: free. Please, Minister, free me from my anticipation. Make cash free to access. Thank you very much.
Thank you. Emma Hardy.
Thank you, Mr. Deputy Speaker. I just want to start with a general point sort of on the bill, and the bill puts an awful lot of faith in our regulators to be able to carry out the functions that are written in it. But I do want to say, Mr. Deputy Speaker, that I've been approached by members of staff working for the FCA, and in fact staff representatives at the FCA, who talk to me about the current climate there, issues around recruitment and specifically around retention of skilled individuals, and how relations are breaking down to a rather concerning degree. So if we want the FCA to do everything that the government is saying that it wants to, especially sort of post-Brexit when we're moving regulation across, then we need a competent and effective FCA. And I do hope the Minister will sort of take this away, and I'm happy to have further conversations with him on this matter so we can resolve the issue. And it does seem to me particularly concerning that the FCA doesn't recognise any trade union. And if you think about comparative bodies like the Bank of England, for example, when the Bank of England recognises trade unions and the FCA doesn't, it does seem to be indicative of a problematic workings at the FCA. But I don't want to comment further on that, but I do hope he sort of takes that away as a serious point, because we can't have effective regulation if we have an ineffective work practice. And I was going to intervene, and he just sort of pipped me to it by sitting down before I could, just to briefly mention clause 64, which I thought was very interesting, which is around providing insurance for after terrorism incidents. If insurance becomes too expensive, they can continue to have insurance, and the government will step in. And I thought this was very interesting, because a point I've raised repeatedly here in the House of Commons is around flood insurance and flood re, and what happens if buildings are continually flooded, and how can we make sure we have affordable flood insurance. So I thought it's very good that they're wanting to do this for acts of terrorism, but I might hope that the Minister wants to sort of look a little bit deeper into sort of flooding as well, and concerns that businesses have around flooding. But my main sort of gripe with this, and I'm sure that the Right Honourable Member for Salisbury will know exactly what I'm going to say, and as I mentioned to him in passing the other day, Mr Deputy Chair, he's welcome to support any of the amendments I'm putting forward in this bill, because he's heard all this before. But I was disappointed there was no have regard for financial inclusion. It's great that we have the have regard for the Climate Change Act, the Labour Party legislation from 2008, but there's nothing for financial inclusion. And I'm going to be laying amendments, and I would genuinely call on members of the Treasury Select Committee, it was a recommendation from one of our reports to support all these amendments going forward, to give the FCA a cost-cutting must-have regard for financial inclusion, and to include a statutory duty to report to Parliament annually on the state of financial inclusion in the UK, the measures that the FCA have taken and is planning to take in order to advance financial inclusion, and recommended additional measures which could be taken by the government and other public bodies to promote financial inclusion. Because the way I see it, Mr Deputy Speaker, is this is a bit of a no-brainer, really. I mean, we have a cost of living crisis, we have people in severe levels of debt and hardship, we have a government potentially, we're not quite sure, bringing forward massive amounts of borrowing to be heaped on taxpayers for years to come, and I'm proposing something that's free. When do we ever get to do that? I'm proposing a small solution to the cost of living crisis that is absolutely free by addressing the poverty premium, ensuring that the FCA has this regard for financial inclusion and looks at it. And I assume the Minister is going to refer to the FCA consumer duty as an example of the action that the government is taking. But it's not enforceable until July 2023, unless, the new Prime Minister decides not to move it at all. But it doesn't address the fundamental problem, which is what happens to the clients that the market don't want, those who are locked out and excluded from financial services. Because it's still, the previous FCA principles were treating customers fairly, but it still doesn't address, if the market doesn't want you, what happens. And what is the poverty premium? What does that mean? In real life, what this means is people paying more for credit due to their credit rating, paying more for insurance because of where they live or past health issues, and paying more for services because they can't benefit from direct debits, or, as we've heard mentioned a few times, they need to use cash. I mean, I do find it ludicrous that we have this situation where it costs more to pay in cash than it does in direct debit, when we know exactly the kind of people who are harmed by this. And of course, poverty premium is not limited to areas under the remit of the FCA, and we've had previous debates about gas and electric and prepayment meters, which I won't go into right now, but its costs are very real. And just to give an example, for my constituency, Hull West and Hessel, nearly a fifth of constituents are affected, and it costs nearly £6 million a year to access the same services and goods. That's a poverty premium. And if any members listening are interested, those especially on their phones would like to look at Fair by Design website, you can look up your own constituency and you can find out exactly how much the poverty premium is costing each and every one of you. And it can be addressed by this have regard for financial inclusion. And financial inclusion is something that's mentioned briefly, and I pay credit to the government and what they're doing on credit unions. I think that's a good step forward. But it's always passed between the FCA, between the Treasury, between other regulators and departments, and everyone nods very seriously and says how important it is and how we must seriously do something about this, but it's not actually our department's problem, it's somebody else's problem. They say, oh, this is really important, we must do something about it, but it's not our department, it's their problem. And so the issue goes round and round with nobody actually taking responsibility for it. This is why the having regard for financial inclusion is so important as a remit for the FCA to actually look at it, and particularly in the areas around insurance. And we know that obviously where a specific example is car insurance. You can't drive a car if you don't have car insurance, yet for so many people car insurance is simply unaffordable. So what does that lead to? Either people driving without insurance or people not being able to take on specific jobs because they simply can't afford it. So we need to do something about it. The proposals that I'm going to be putting forward, that I will be calling for support from across the House on, will look to address this. They end the current damaging situation by giving that clear remit to the regulator by saying, the buck stops there, you have regard for financial inclusion, you need to look at this. And this will sometimes be, the FCA taking a main role and other departments, but it means that the buck stops somewhere. It means somebody has to take this seriously and look at the extra costs facing the most financially vulnerable in our society. And I would also like to call on the Minister to introduce measures to look at groups who will be facing digital exclusion as well, to support them with technological banking, and specific measures to ensure that blind and partially sighted people are able to access their finances and manage them independently as well. And I'm very excited, Mr. Speaker, because I keep asking to be on the Bill Committee, and I think I've finally been given the nod, so I look forward to discussing this in more detail at every opportunity, through every clause, as this bill moves through Parliament. Thank you.
Thank you, Mr. Deputy Speaker. It's a pleasure to rise in support of this bill, and I won't say too much to repeat what so many people have said about the former minister, the member for Salisbury, and indeed the current minister on the Treasury bench, for their excellent work in bringing this bill to the House. I just wanted to bring up a couple of specific things that may not have come up as much as it might have done in this debate, which is, first of all, and the former Chancellor, the Right Honourable Member for Richmond, did mention this, the call-in power. And there has been some criticism in the press that may or may not have come from people within the regulators, or indeed people speaking on their behalf, that somehow the call-in power from the government is somehow going to damage our regulatory system. It's somehow illegitimate for the elected government, or indeed this House, to in extremis, if it feels that something is badly awry, to override the non-elected regulators on a specific area of financial regulation. I just want to put on record, I think that their concerns are, they may be well intentioned, but I think they are wrong. I think that it is critically important that this House and the elected government has the power on something that is so significant, i.e. financial regulation to a sector that is our jewel in the crown. It's a sector that employs millions of people, 2/3 of which are outside London. It's a sector that we all accept on all sides of the House that we should champion and work with. It is unconscionable almost that this power did not already exist. And so I think that we should stand firm if in the other place, or indeed in this place in committee, people wanted to reject that call-in power. I think it's of critical importance. Of course.
He speaks with a lot of expertise in this area. Can you give me, for instance, an example of when that power might be used, a set of circumstances where the government might want to do that?
So, lest anybody thinks that I have any particular specialist knowledge on this regard, I could imagine a scenario, and this is entirely, I repeat, on my own view. I can imagine a scenario whereby there was an intention supported by this House, indeed by the government that's supported by this House, for certain changes towards a regulation such as MiFID II. And the intention stated in, for example, a strategy document that may say the intention for this is that A, B and C were to occur. But when the regulations are indeed drafted, that intention did not appear to come through in those regulations. I think in that sort of instance, it would be very legitimate for the House and the government to say, no, what we intend is the following, and we're going to change the detailed regulation in order to achieve the aim, the democratic aim, the aim supported by the government and this House that we seek to achieve. Now, there are a couple of other things that I think the government could have gone further in this bill, and I hope that in the coming weeks or indeed months we should consider. The first is the bank levy. Now, I know this is not always a popular thing to say, and, you know, in politics sometimes it's important to say unpopular things as well as it is to say popular things. When we are in an internationally competitive sector, if other jurisdictions that we are competing with for people, for capital, for institutions, for new investment, if their tax burden gets to a point where it is significantly, or indeed even a little bit, less than ours, and for other reasons people may find them attractive in other ways, we should consider maybe our tax burden that has risen over recent years, find ways to reduce it. The bank levy is one. It came during a time in the aftermath of the financial crisis, which is now quite a long time ago. I think it is really important that we consider getting rid of the bank levy to say Britain is still the leading centre of financial services for the world as much as we possibly can. I'm not, by the way, saying this is a panacea. No, far from it. That's why this bill has, 300-something pages. There's a lot we've got to do. But the bank levy is a tax, and if we impose high taxes on internationally mobile capital or institutions, there may well be a penalty for this country in terms of attracting those institutions. And I'd ask the House to reflect on that point, and indeed the Treasury bench. The second point is ring fencing. Now, the former Chancellor mentioned this. On ring fencing, when I was at HSBC, and I probably should have declared that at the beginning, I formerly worked at HSBC before I came to this House, and indeed in the City and other institutions. When I was at HSBC, I had the fortune to work for quite a long time on internal restructuring of the bank as part of a strategy, of which ring fencing was a huge part, because HSBC and Barclays were the two big British banks that had big consumer sort of retail bits and big investment banking bits. And even at that time, it was obvious to many of us that the most critical thing that we were doing in terms of ensuring the safety of those institutions, and indeed because they're so big, helping the safety of the whole financial services sector, was the recovery and resolution power, not just the ring-fencing aspect. And so I think that the review that's been done is very capable, very thorough. I would urge the Treasury to look a bit further and say, do we still need ring-fencing even under the terms of how it's been reviewed? Can we look again at the thresholds? Can we make this a less onerous thing for big institutions? Why? And I go back to the competitiveness point. If there are ways we can improve our competitiveness without compromising on safety, I think we should consider them. And with, of course.
I'd like the member to give way. Taking back to his earlier point about competitiveness and certain institutions perhaps being turned off investing or establishing themselves or removing themselves from the United Kingdom, where does he think the single largest threat for that comes from, if there is a turn-off?
I thank the right honourable gentleman. I would posit two particular jurisdictions. The first, and I think particularly the London Stock Exchange, which, lest the House doesn't fully appreciate it, the London Stock Exchange, in terms of the amount of capital that it has, in terms of capital raising, IPOs and various other things the London Stock Exchange does, if you go and look at it compared to even 5 years ago, let alone 10 years ago, you've seen a dramatic fall-off. Amsterdam is doing very, very well, its stock exchange. I think that Amsterdam is a jurisdiction, though that will never rival London or the UK, I should say, because we have huge advantages and huge strengths. We need to consider that there is threat to the London Stock Exchange from there. And indeed, you have, so that's the first. And in the Middle East, there are various jurisdictions, some quite surprising ones, that are seeking to really, and particularly Dubai, but seeking to really try and make themselves attractive, particularly to capital from Asia, and indeed America, Asia, trying to make themselves a hub for some of that work. So again, this is something that they can't rival us, but you don't have to match us fully in order to damage our competitiveness. And I think that that's a very important point. Yes, of course.
Further to that, does the member think that those locations, especially perhaps the Middle East, that there may be an opportunity for, let's just say, funds arriving in those destinations that are not as scrutinised as they are here in the United Kingdom? Is that a potential threat to the banking sector?
So, I don't want to cast aspersions on any other jurisdiction. I think it is clear that we should be proud of our own high standards. And I know we will probably get to later on in this year, and we did earlier on in this session, about illicit money from Russia, for example. In this country, we take action, and we pride ourselves on the higher standards. It is not always the case everywhere. But that aspect of competitiveness is not a race to the bottom. And this is a really important point. You can be competitive and have high standards. We should not say the drive for competitiveness means you drop your standards, you end up with corruption and money laundering and all the rest of it. That just is not necessarily true. And in this country, we know we're proud of our institutions, we're proud of our sector, we're proud of our ecosystem, but that does not mean there aren't things we can do to improve. And I think that this bill is a very, very good example of containing a huge panoply of measures that will help strengthen our financial services sector. The last thing I will say is about mutual recognition agreements. Now, mutual recognition agreements are quite dry, technical things, but ultimately what they allow is for easing of doing business from one jurisdiction to another, from the UK to, for example, Switzerland, where we've had a huge, very, very good building of relationship with that country. We should do much more of it, but we should work with the Trade Department to make sure that our trade deals do include much more in terms of services provision, not just mutual recognition agreements separate from that. Our trade deals, services trade, will benefit this country pretty much more than any other country in the entire world. We need to work with our trade department, work with the Foreign Office, work with all our international ambassadors to achieve that aim.
Right. Now, if everybody stands up who wants to speak, 1, 2, 3, 4, 5, 6, 8. Thank you. We're going to have to reduce it to 6 minutes, I'm afraid, just to get everybody in. Vera Hophouse, 6 minutes.
Oh, well. Thank you, Mr. Deputy Speaker. My honourable friend, the member for Richmond Park, has already indicated there is quite a lot to welcome in this bill, but there are also a number of things that we Liberal Democrats do not agree with and would like to be improved. Currently, the bill does not actively promote the leading green finance sector we were promised. According to the WWF, we need $32 trillion by 2030 alone to tackle the climate emergency. The bill in front of us could be a unique opportunity to develop the green economy the future needs, providing routes to roll out net zero technologies and allowing UK businesses to capitalise on green transitions. As the chair of the Committee for Climate Change pointed out only this morning, tackling soaring energy bills, which is currently the most important thing that we consider, and tackling the climate emergency go hand in hand. Net zero technologies could reduce household bills by £1,800 a year, a reduction so desperately needed to so many people. This bill could be a unique opportunity to make this happen, but fails quite dramatically short. In its current form, the bill prioritises competitiveness over net zero and accountability. Section 25 adds the need to advance compliance with the UK net zero ambition targets to the list of regulatory principles to be applied by the FCA and PRA. However, the new principle, namely that regulators must have regard to the UK net zero target, is not strong enough. Additionally, there will have to be limited margin to acknowledge the rule of nature in achieving net zero. This approach is reckless. The bill opens up the possibility, and it has been mentioned today, of soaring food prices by throwing out reforms introduced in 2008 to protect consumers from volatile trading practices. The government always defends its net zero strategy by placing responsibility on the market. Yet before the 2008 reforms, food prices rocketed after speculative trading on food prices drove up prices. Regulators are vital in making sure that consumers are protected and that markets function well, but not out of control. A former UN Special Rapporteur, and we've heard this already this afternoon as well, has said speculators are indeed betting on hunger and exacerbating it. Our country cannot afford another dimension added to the cost of living crisis. Rather than volatile competitiveness, this bill has to provide clear legal obligations and a commitment to the UK's net zero target. Net zero must have the same priority for regulators as economic competitiveness. The scale of the climate crisis required massive shifts in approach that can only be achieved with explicit legal duties. This must include a new objective to decarbonise the financial system. Regulations and net zero aims have to work hand in hand, as I've already said. The government must add climate targets to the primary objectives, which would give them a higher status as the bill currently proposes. We Liberal Democrats would even go further and would ban new fossil fuel companies from being listed in the London Stock Exchange. We would also create new powers for regulators to act if banks and other investors are not properly managing climate risks. This is the sort of ambition that we need, but the government's ambition is lacking. We have less and less time to act on the climate emergency. The time is now, and I urge ministers to not miss this very unique opportunity. Thank you.
James Davis.
Thank you, Mr Deputy Speaker. My comments today on this very welcome bill will primarily focus on its ability to improve cash and banking services access. In my constituency, like many others, bank closures have become increasingly problematic. It's now 7 years since the last bank shut in the city of St Asaph, in the heart of my constituency, while Denbigh has also seen closures. And last year, TSB, Barclays and HSBC shut in Prestatyn, and this followed on from the town's loss of NatWest, the Royal Bank of Scotland and building societies in the preceding 5 years. Prestatyn High Street was left without a single bank or cash machine, despite being a busy regional shopping centre. Now, cash remains important for many businesses and residents in my constituency. Following a campaign and thanks to Cardtronics and Principality Building Society, 3 new free-to-use cash machines have since been installed in Prestatyn Town Centre. In addition, since June of this year, new legislation has brought about cashback without purchase services through various local businesses. However, banking services in the town remain lacking. Last year, Derek French, a former executive of NatWest and founder of the Campaign for Community Banking Services, identified 50 communities in Britain where he believes shared banking hubs are most required. Prestatyn was one of the 22 of these which have already lost their last bank branch. And earlier this year, the Royal Society for Arts, Manufactures and Commerce, RSA, published a report suggesting that 10 million people would struggle in a cashless society. And as incomes are squeezed, there is evidence that some people are turning back to cash to help budget. The Post Office reported record withdrawals in July 2022, while monthly Link ATM withdrawals still exceed £7 billion. Surveys commissioned by Link have indicated that 10%...
Thank the member for giving way, and appreciate that he has highlighted about a number of banks and areas that are being decimated by banks removing themselves from the high street. There's a section of our community who are not IT literate, who have a major problem, and they are being totally disenfranchised. And, you know, I think that it's something that we need to put in place to legislate to ensure that those people are not left without having some access to a bank that they used all their life.
I think he's absolutely correct, and I hope that this bill will go a long way to helping that situation. I was coming on to say that 10% of people are planning to use cash more in the 6 months, in addition, owing to cost of living pressures. The Access to Cash agenda owes much to Natalie Seeney and her Access to Cash review. Following a landmark agreement at the start of this year, the banks and leading consumer groups formed UK Finance's Cash Action Group. Link took on the role of assessing the impact of proposed bank branch closures on communities. And as of the 4th of July, this agreement was extended to include communities where bank closures have already taken place. Link can recommend new cash services such as banking hubs and ATMs according to the cash access needs in each community. New services will then be delivered by a new banking hub company set up by the banks, or in the case of ATMs, by Link. This bill, of course, puts this very welcome voluntary arrangement on a statutory footing. It confers on the Treasury a duty to prepare a cash access policy statement, which I understand is currently being drafted, and powers to designate banks and firms such as Link and the Post Office to take steps in relation to that policy. Further, it gives the Financial Conduct Authority powers to take action on those designated firms. This summer, I put forward Prestatyn for assessment by Link for a banking hub. I'm very grateful to Nick Quinn, Head of Financial Inclusion at Link, for his visit to the town in January, and for meeting me and indeed his colleague Chris Ashton also this week to discuss in detail my application on behalf of the town. A banking hub would facilitate cheque and cash deposits and cash withdrawals, and banking staff from each of the big banks would be based in the hub on specific days to help customers with community banking issues. So this legislation is very much welcomed, and I extend my thanks to the Economic Secretary, to the Treasury, but also particularly to his predecessor, the Honourable Member for Salisbury, who I know has put an awful lot of time into this agenda. I would urge the Government to consider ensuring that assessments of the needs of communities by Link should be transparently published, and that there should be a formal process of appeal also. And I would ask that consideration of access to banking services through the Welsh language should be referenced in the Cash Access Policy Statement. Furthermore, it would be helpful to explore the scope of the community banking services which banking hubs could potentially be mandated to provide. For example, opening a new bank account, amending direct debits and standing orders, applying for a loan, arranging third-party access, or commencing bereavement procedures. It's also important to clarify whether the bill will give the FCA the power to prevent the closure of a bank branch, ATM or cash access point of another kind, where there's no suitable alternative in place, so that in future new gaps in provision do not occur. I understand that in recent times, Link has protected 3,000 free ATMs in remote and deprived areas and funded new ATMs in over 100 communities. I hope the Government will commit to protecting free cash withdrawals and deposits, and that this can be explored in the policy statement. An indication by the Minister of the likely publication date of the policy statement would be particularly appreciated. Mr Deputy Speaker, other elements of the bill will enable credit unions to offer a greater range of products and services, will strengthen the rules around financial promotions, and will enable regulatory action by the Payment Systems Regulator to require the reimbursement of victims of authorised push payment scams. All of this is very much to be welcomed, but I would urge the Government to ensure that the authorised push payment scam regulations cover all feasible methods of payment, both now and in the future. Mr Deputy Speaker, I fully support the Financial Services and Markets Bill, especially as it responds to significant concerns over the availability of cash and banking services. It's important the bill should be delivered as soon as possible so that existing cash infrastructure can be protected.
Ben Lake.
Mr Deputy Speaker, and it's a real honour to be able to contribute to this important bill this evening, and a real pleasure to follow the Honourable Member for the Vale of Clwyd, who I thought gave us a masterful, detailed account of the problems and the challenges that the loss of bank services or bank branches has on rural communities in particular. And whilst I hope to emulate some of his mastery of the subject in my own remarks, I'd like to begin just by associating myself with some of the concerns that have been raised by other members this afternoon, particularly my honourable friend from Glenrothes and some of the concerns that he raised regarding the transfer of responsibility and scrutiny power away from Parliament and more towards the regulators, and in certain respects with regards to the repatriation of some of the regulations to designated legislation committees, and also associate myself with the concerns that have been voiced regarding the need to strengthen, I suppose, as an objective for the regulators, the need for sustainable growth, and to ensure that the regulators are very much aligned with some of the expectations that the government have with regards to net zero. I don't think we've yet heard an explanation as to why there can't be that objective placed, a statutory objective placed on the regulators, for I see that it is very much something that works hand in hand with sustainable growth and competitiveness. I don't think they need necessarily compete with each other. But as I mentioned, Mr Deputy Speaker, what I'd like to focus my remarks on today is the access to cash, and in particular part 2 of the bill, and clauses 47, 48 and the corresponding schedules 8 and 9, that have a great deal to commend them for. I think I would like to put on record my support to some of the measures that will, I believe, bring about real improvement in safeguarding the access to cash for so many of our communities. Noting, of course, that a lot of communities, including in my own constituency of Ceredigion, have already suffered bank branches and loss of ATMs, meaning that it has long been the case that they have to travel 10, 15 miles in order to access a free ATM. But again, this is at least puts in place a set of regulations and a process to ensure that no further gaps arise in the future, and for that I do welcome it. But I would like to return to a point that I think was made by several honourable members, including the member for Blackpool North and Cleethorpes, and to ask the government whether it would be possible to extend the remit, if you like, of the access to cash clauses to include certain services and in-person services in particular. Other members have explained just how important the continued access to in-person services, the branch services, is for many people, individuals in particular. Yes, we've heard of the importance to the elderly and also those who perhaps are not IT literate. I would also add, of course, that in some rural areas, digital banking remains a distant dream due to a lack of connectivity. So it is very much an essential amenity to them to be able to actually access that advice for personal banking reasons. But something that I think bears repeating, and I must admit is not something that I have in the past perhaps afforded enough attention to, is the impact it has on small businesses and also to charity and community organisations. In Ceredigion over the last decade or so, we've seen a number of towns lose their final bank. They are, nevertheless, still market towns. They try to plough a prosperous future, but the loss of in-person banking services has had an impact on small businesses and on charitable and community organisations. To offer a few examples, those perhaps in Tregaron, in Lampeter now increasingly so on, and Llandyssil, will often have to travel, if they are a small business, to Carmarthen, which, depending on where exactly they're located, is perhaps a round trip of between 45-60 miles. And of course the banks will open on business hours, meaning that if they are a small business, it entails either closing for a few hours in order to deposit cash or to conduct some of their banking services, or indeed to go without. And I know for a fact that many businesses are now having to amend their business practices in unhelpful ways in order to accommodate this new banking reality. But further to that as well, you have charitable organisations, community organisations. I know it's been a real challenge for many to open accounts. Community Pub Initiative, for example, I was told had to wait almost 9 weeks in order to open a bank due to the changes of the services locally. And charities in particular have reported to me just how, in all fairness, banks just don't understand the particular requirements they have as account holders. They don't understand that to change mandates in person is a particular task for charities. And in rural areas, like in many others, many of these charitable groups and organisations perform and make a valuable contribution to communities. And they are volunteers at the end of the day, and so having to forcing them to travel, again, 60-odd miles just in order to change a bank mandate is, I think, unfair. And that's why I would be very interested to see if the government could extend part of the new requirements under the access to cash to include those banking services. Because at the moment, I'm afraid banks aren't, of their own volition, perhaps, waking up to the importance of maintaining these services in rural areas, and I'm afraid to say that communities are being let down. This is where the government could step in. I think it would be a very important thing and much welcome on both sides of the House.
Right, the last one on 6 minutes is Harriet Baldwin, and then we'll go to 5, so everybody will have exactly the same amount of time. Harriet.
Thank you very much, Mr Deputy Speaker, and it's an honour to be called to speak in support of this bill in this debate, and actually, in a way, an advantage to be called at this time because so many excellent points have been made by so many wonderful people, and that I'm pleased to say that I agree with most of them, and they've been better expressed than I could have expressed them, including by the former Chancellor and by the former Economic Secretary, who was responsible, I think, for putting together quite a large part of this bill. And I do recall myself that milestone when the country voted to leave the European Union on the 23rd of June 2016, that I myself was Economic Secretary at the time, and I think there were a lot of questions that were then opened up about what would happen to the regulation of financial services, which has been referred to many times in this debate as being one of our most important export and tax-paying sectors that provides many hundreds of thousands of jobs up and down the land. It is a very important sector, and over the 6 years we have flirted with the idea of equivalence. I think it is the EU Commission that's decided that equivalence doesn't suit them. I think it's their loss, frankly, because obviously we are equivalent, or we were equivalent, and I think it's their small businesses and their growing firms that will lose that easy access to the United Kingdom capital markets, and therefore I think it's a shame for them. I also know that discussions were had about the Canada-EU trade agreement, the kind of discussion and chapter on financial services, which is not in our current trade agreement with the EU, and clearly that has also been rejected as the way forward, although there is scope for much more, I think, in terms of mutual recognition and opening up of markets. And so I welcome the decisions that have been made in the publication of this legislation and the opportunities that it's seizing in terms of divergence. And it is welcome to see that the industry also has been very much consulted and brought along with this in terms of how Solvency II changes, how MiFID II changes can actually help our economy grow. But the point I want to focus on is one actually that hasn't been brought up much in the debate at all, which is around the freedoms that this gives us to look once again at the market for advice and guidance in this country. We've heard from many of the challenges that consumers face when they're making financial decisions on their own behalf. and the cost of financial advice is high. Guidance itself, it can be very generic. There is, of course, access to the Money Advice Service, to Pension Wise, which I do encourage constituents to use if they can. But this opportunity in this legislation gives us the chance to actually look once again at the financial advice market and the opportunity that it presents to have more customised guidance now because of the way that technology has evolved and the important role that the FCA's regulatory sandbox allows people to experiment in terms of those kinds of measures. And I would urge everyone who's spoken about consumers in this debate to support an amendment that I'm planning to table with the help of the Investing and Savings Alliance that will allow the provision of much more personalised guidance to be provided through the use of innovation, the use of technology, that will help consumers through those difficult decisions, perhaps when they move employer, should they move pensions, those kinds of decisions. And I think would create a better informed consumer who won't necessarily fall for some of the scams as easily as the ones that we've been hearing about during today's debate. And we do need to arm our consumers to be able to tackle those. So I'll be tabling that amendment, Mr. Deputy Speaker. My final point is around the role of the regulator. Again, it's been made time and time again in this debate. Who regulates the regulator if the regulator puts in place something with which we as MPs or our constituents disagree? And I do think that there's an important role for the Treasury Select Committee on which I sit, and we will take that responsibility very seriously in terms of scrutinising changes. But I also think one of the great strengths of our country is our common law. And I know that the Minister himself has been looking at the opportunities that have been outlined for bringing in some further rights of appeal through the common law system in this country to some of the decisions that regulators make. I know the Minister's been taking them seriously, and I look forward to him responding to those points at the end of the debate. Thank you.
Thank you very much. Just to inform everybody, the wind-ups will begin no later than 20 to 7. And anybody who has spoken in this debate will be expected to be here at the wind-ups. 5 minutes. Siobhan McDonough.
Thank you, Mr Deputy Speaker. I'm furious to report the imminent loss of yet another bank branch in Mitcham Town Centre. The year before last, it was Nationwide. Last year, it was Barclays. This time, it's Halifax. A bank that pretends to consult with their long-standing and loyal customers about their branch closure, but then refuse to attend my public meeting to hear the concerns of those customers in person. Contrary to their "it's a people thing" slogan, it seems Halifax really don't care what people think at all, not least not if they live in Mitcham, they're elderly, disabled, or rely on face-to-face banking services. Every day this week, I've stood outside the branch, gathering customers' views and listening to their concerns. Their opposition is overwhelming. The latest bank closure is yet another nail in the access to free cash. And I have the evidence to prove it. When Barclays Mitcham closed last year, one of the staggering 650 Barclays branch to disappear since 2015, we surveyed over 500 residents outside the bank. An extraordinary 50% did not use online banking. They were reliant on that branch. Many did not have access to the internet. Some did not trust it. Others, particularly the elderly, only used cash. And then there were those who relied on the help and support of the staff who they could trust with their money. I don't believe that these views are unique to Mitcham, because when high streets lose their banks, the digital divide prevents far too many people from turning online. And Age UK highlight that 1 in 5 older people will rely on cash for everyday spending. But Barclays didn't care. Despite 3 years still to run on the lease, they closed their branch and swapped it for a bus. Yes, really a bus that pulled up randomly outside the empty branch on the off chance that a customer was fortunate enough to be passing by and willing to queue in the rain. Sounds safe as houses. Do not fear, they said. There are other branches, just a bus ride or two away.
all your constituents could just use the post office for their basic banking needs. That's the same post office whose doorway was too small for my disabled constituent to access with their wheelchair, the same post office that no longer has a free cash machine outside. Fortunately, we still had Halifax, well, until now. Its loss is the latest hammer blow to our high street. Does the Minister agree with me that Mitcham now makes a perfect location for a new shared banking hub? We are told that a community can demand access to free ATMs, but that is not the experience on the ground. People in Pollard's Hill have tried for years to get a free ATM. Residents who literally have to pay for their access to cash, small amounts of money that they get on a daily basis for which they are charged. The nearest post office had one installed, but now even that's gone, and a ridiculous clause in the new co-op lease prevent a free ATM from opening because a paid-for machine is further down the terrace. How can that possibly make sense? Because I believe that we need the need for access to cash is growing. The cost of living crisis has seen the return of money jars. Jars where households separate their cash and counting out their pennies to ensure that they can make ends meet. Now, of course, I accept that we're in a changing society and reliance on cash has changed for many. But those on the wrong side of the digital divide are simply being cut off from society, being made to feel not part of the same world that we inhabit. Like Mr Barley, chair of Mitcham's British Legion branch. Throughout the lockdown, he relied on his milkman for milk delivery and the rest. But as you've guessed it, now Milk on More too are going online, and those loyal, long-standing customers no longer get this service. So I say to the Minister that Mr Barley's of this world are treasured in our communities. Halifax, Mitcham remaining open isn't a silver bullet to solving the problems they face in the digital divide and access to cash. But if we are not careful and everything from milk to money moves online, then they are simply at risk of being left behind.
David Simmons.
Thank you, Mr Speaker. I'd like to add my congratulations to the Ministers, both past and present, involved in bringing this forward. It is an incredibly important piece of legislation for my constituents. Ruislip Northern Pinner has a very high level of employment, both in the city and in connected financial services. And it is also a subject close to my heart personally, because I belong to that even more cherished race of human beings than Tory MPs, and that I am a former banker. The number of very good contributions to this debate has been exceptional, so I'm going to try and confine my contribution just to those items which haven't really been covered in a lot of detail. The first reason why I think this bill is really good and really important is that it will continue to support the UK's long history of innovation in the financial sector. And it is a very proud history if we look at the role played both by financial centres in London and Edinburgh in the development of financial products, which have brought stability and security to people's lives for centuries. The UK has been a leading light in the world in this area. And so a piece of legislation that enables this sandbox concept, for example, that continues to support that innovation, is incredibly important to this sector. The second issue which I'd like to highlight is that as we move away from the EU structures and governance, that we need to ensure there is that appropriate level of scrutiny about the arrangements for regulation that we have and about the implications of our mutual recognition agreements that we propose to enter into. Now, contrary to what is sometimes said about EU matters being dealt with by unaccountable bureaucrats in Brussels, if anything, our criticism in the UK was often that there was too much scrutiny, too much democratic involvement, that trade deals, for example, agreements had to be looked at by the European Parliament, by the Committee of the Regions, they had to be signed off by the Council of Ministers. There were multiple levels of engagement in that process. And we do need to ensure that organisations like Zurich, who I know shared a very helpful briefing with members of this House, which certainly informed my thinking about the bill, are able to have an appropriate level of input so that we get the calibration of this right to support innovation, as I know the Minister is committed to, but also that we have the appropriate levels of consumer protection. Now, many members have referred to the sector as being a jewel in the crown of the British economy, and that clearly remains the case. And it's very striking that in the context of the government's levelling up agenda, we see, for example, significant inflows of investment into Northern Ireland as a result of the opportunities that have been created by the development of the economy there. And so the opportunity that this has created for us to look at how we spread the benefits beyond the centres which the member for Central Devon, the member for Salisbury referred to earlier on, to other parts of the United Kingdom is critical. It's critical for the reputation of the sector, and it's also incredibly important for our economy. And a key element of that, Mr Deputy Speaker, is going to be ensuring that we future-proof the regulation of financial services in the UK. There's been much mention of crypto, but I'd also like to add to that the need to ensure that non-regulated activity, that it is undertaken by regulated financial institutions, is an area that is going to bear a good deal of scrutiny. And I know our thanks are due to Private Eye magazine, for example, to the detail that they've shone, the light they've shone on the activities of a number of organisations. Now, the member for Glenrothes referred to issues like funeral plans in his comments earlier on, but the activities of will-writing organisations, of trust services, the Family Trust Corporation, the Phillips Trust Corporation, where significant numbers of consumers may find themselves heavily disadvantaged as a result of advice which they felt came from a trusted financial source, but which was not regulated, is an area that we are going to need to pay a good deal of attention to. And the final issue, Mr Deputy Speaker, access to cash has been talked about a good deal. I would highlight specifically the need, especially for small businesses, to be able to access banking for the purposes of transacting in coins. Especially in my constituents, I've heard from a lot of small shopkeepers, small business owners, that it isn't just about consumers being able to get to an ATM. It's about them being able to pay in coin that they receive in payments from customers, and also being able to extract it for the purposes of having change for cash transactions, which is something which ATMs, for the most part, simply can't do. So in conclusion, Mr Deputy Speaker, I'm very pleased to support this bill. It will, as the Minister has said, support innovation in this key UK sector. It will ensure that our country remains a global market leader, and importantly, it will ensure that consumers in my constituency and across the UK are protected from scammers who may seek to do them financial harm.
Participated in the debate should start to make their way towards the chamber for the wind-ups at 22. Jim Shannon.
Thank you, Mr Deputy Speaker. The pleasure to speak in this. The bill is substantial and weighty, and rightly so. Our financial services are an imperative sector, and perhaps never more so today with the cost of living, with people at the mercy of the financial institutions to lend money to carry their businesses through this time period, families looking for a low-interest loan to fix their cars, and perhaps even for the housewife trying to buy a second-hand washing machine. These are the things the ordinary things that people have to face. The regulation of financial services is an essential component, and we must get it right now and rectify the remnants where Europe has not been successful in fostering businesses and protecting the individual. I'm very keen to support the clauses 8 to 23. They seek to grant additional powers to regulators, which would allow for greater regulation of financial promotions. This morning in Westminster Hall we spoke about the cryptocurrency and the crypto assets, and the Minister answered some of those questions, but I think it's really important because it is estimated some 2.6 million people across the UK use cryptocurrency, and 100,000 people in Northern Ireland. Some 15% of the people in Northern Ireland use that. 38% of people in Northern Ireland citizens say they are thought about using cryptocurrency, but just not yet done that. So the regulation of this up-and-coming form of investment and spending is necessary and needed. On clauses 24 to 26 seeks to legislate to ensure appropriate democratic accountability for the regulators. And the bill facilitates including giving the FCA and PRA new secondary objectives to advance the international competitiveness and medium to long-term growth of the UK economy. I've spoken this a number of times in the House, Mr Deputy Speaker, but I'm not convinced, Minister, convinced in its entirety that the new regulations for the FCA are strong enough to make a difference. And whether this bill goes far enough in regulation, I think of one of my constituents, and I think of him regularly because I know the case exceptionally well. And he was on Panorama on the recent episode. It was on the 16th of August 2022. They referred to the £1 billion savings scandal. Some £47 million of life savings was taken away from consumers It started with 16 million. The FCA, it seems that they had the ample evidence of wrongdoing and the powers necessary to act and claim. But yet nothing was done. And one of my constituents, a number of my constituents actually have lost money through that. So I'm not sure, Minister, that this bill does go far enough. An essential component of this must be the protection of access to cash. I'm old-fashioned, Mr Deputy Speaker. I use cheques all the time. I use cash. I have the jingle of the cash inside pocket. I have the pound notes, not pound notes, sorry, I'm going back too far. I have the £20 notes here in my wallet. And I heard the Honourable Lady for Northampton South referring to that her daughter got a cheque. I get them every day. I write them every day, and that's who I am. You know, so I do find it important to underline the issue of the use of cash and cash flows essential for the small business on a small profit margin. Access to cash is essential, and as the Post Office announced that just last month it handled more than 800 million in personal withdrawals, the most since records began 5 years ago. That tells me, Mr Deputy Speaker, that cash is still king, and because it's still king, then we shouldn't disregard it. And I'm also probably old enough, Mr Deputy Speaker, to remember when it was in the 60s, in the early 70s, whenever my mum and others put an envelope aside and the money was set aside for the gas, the money was set aside for the electric, the money was set aside for food, for the rent, and a tight budget. And what that meant was that the management of the monies for all of the bills that were done right. I believe we're coming by that history will repeat itself, that we will see that happening once again. So cash will be more important than ever. The Honourable Gentleman referred to the growth of the credit unions. For me, in Northern Ireland, the credit unions have been an incredible success. They can do better for everyone. They have replaced some of the cases of the banks where the banks have closed. So for me, I'd ask the Minister this question: what can be done to ensure that the credit unions can be used greater? I'm very, very concerned that as we approach the autumn and the winter, that there will be many who will suffer from malnourishment, many from freezing cold homes and depression in the coming crisis. So I believe that this bill today will do more than just regulate the financial regime. It will ensure that the people that we as MPs are very, very privileged to represent in humility, that we can support them. This bill needs to do that. We need to keep them protected this winter. Thank you.
Gareth Davis.
Thank you, Mr Deputy Speaker. It is a great pleasure to speak in this debate on a bill that I feel, frankly, is the biggest reform of financial regulation in a generation. But first, let me pay tribute to my honourable friend, the longest-serving Economic Secretary we have known, who committed his work with great diligence and who is greatly respected still in the industry to this day. Mr Deputy Speaker, I care a lot about the financial services industry. I worked in the industry for many years. It taught me a lot about the world. My wife works in it today, so I personally want the industry to thrive. But given the significance to our economy and people, we all should. The Prime Minister was right when she said that it is the jewel in the crown of our economy. It's of direct benefit to businesses, savers and investors, and of indirect benefit to all of us through jobs, growth and tax revenues. So that's why it's so important that we do everything we can to unleash the sector's potential. And this bill does just that. I welcome the fact that the bill takes advantage of our regulatory freedoms now that we are not in the European single market, giving more control to our domestic regulators and ensuring that they're more focused on international competitiveness. And for all those who worry about this resulting in a decline in regulation, they should be assured that the primary objective remains intact, and that this mirrors established conventions in markets with highly regulated systems such as Australia and Japan. I welcome the moves to tighten the regulations on promotions by creating a new regulatory gateway for approvals. I welcome the provisions to improve the coordination between the FCA and the PRA. And as a member of the Treasury Select Committee, I welcome the enhanced role for the committee, but join others in saying that it's important that the committee also has the resources and expertise in order to be able to carry out that role effectively. So look, this is an excellent bill. It will help drive the industry and our country forward. But let me just conclude by talking about one aspect that I've been struck today in that I think we all agree on, and that's the need to further democratise our capital markets. Despite the remarkable success in the finance industry, it genuinely bothers me that not enough of our people are directly participating in or benefiting from our capital markets. While we're all stakeholders in UK PLC, not enough are shareholders with a stake in our economic success. And I think there are three things that we can do to address this. I'm a huge advocate of extending auto-enrolment to those aged 18 to 22 so that they can get on the savings ladder earlier. This will create 900,000 new savers, £1 billion extra in savings for our economy, and it will do a great deal to encourage a better savings culture. I also think we should look at removing regulatory obstacles to people receiving investment advice so that people don't just save, they invest. And finally, I want us to get on with reforming Solvency II so that more pensioners can expand their investment universe into illiquids like infrastructure. If we do these things, we can build on this excellent bill and ensure that everyone shares in the success of our world-leading financial services sector.
Wind-ups, Binapong Azari.
Thank you, Mr Deputy Speaker. I'm grateful for the opportunity to close the debate on behalf of the opposition, and as my honourable friend, the member for Hampstead and Kilburn said, we broadly support this important bill. We recognise that regulatory divergence from the EU will reduce opportunities for the sector, such as through Solvency II reform and making sure that the UK is a welcoming environment for fintech. We also support the principle of a secondary objective on international competitiveness and growth. Labour is committed to supporting the city to retain its competitiveness on the world stage, and the UK remains a global financial centre outside the EU. This should not mean, however, any compromise on financial stability or consumer protections. I also want to echo my honourable friend's point about recent government infighting. This has undermined the confidence in the city, just when the sector needs clear direction on post-Brexit reform. The new Prime Minister's off-the-cuff policy announcements during the summer and threats to abolish our world-leading regulators has left our financial services in a state of uncertainty. The government must provide the city with the certainty it needs to thrive and take advantage of opportunities outside the EU. So I therefore hope that the Minister will use this opportunity to inform the House, the wider public and the financial services sector whether the government plans to radically alter this legislation in the coming weeks and months. While we support this bill, there are a number of issues that we believe the government has yet to address. My honourable friend raised a number of these important questions in her speech that I hope the Minister will address in his closing remarks. First, will regulators be held to account on the advancement of long-term growth in this real economy? How would this bill address the decline in the UK's financial services exports to the EU? I would also like to take this opportunity to thank the member for Salisbury on his work he did on this bill. I know that along with my friend, the Honourable Member for Hampstead and Kilburn, and along with the rest of our team, that he was always very communicative with us on this side, despite our differences, and he was always respectful in his delivery. I also want to say it's pleasing to see the former Chancellor speaking in this debate, and it shows that he is still taking this bill very seriously. I thank honourable members on all sides of this House for their contributions. I'm particularly grateful to the honourable member for Feltham and Heston, who talked about how mortgage prisoners who are impacted by the cap on SUR, and I hope the Minister will take up her invitation to meet her, as she certainly has a lot of knowledge on this area. The honourable member for Edmonton spoke about how small to medium-sized businesses, such as hairdressers and nail salons, rely on cash payments, and how her constituency is one of the most cash-deprived in this area. The honourable member for South North Hampshire referenced the need for free access to cash and highlighted the points raised by members on this side, and I hope on this vital topic we can find a common ground to resolve this issue in the best interests of all our constituents. The Honourable member for Hayes and Harlington, and the Honourable member for Hull West, and the Honourable member for Blind-Eye Ghent all raised concerns about the FCA. I am sure the Minister will agree holding bad actors to account is very important, and I look forward to his comments in his summary. The Honourable member for Walthamstow made a particularly important point about how pay lenders who are drowning under this cost of living crisis. This wishy-washy intervention that is planned for 2023 is just far too late. We need swift action right now, and my honourable friend pointed out there is a lack of strong will from this government in this area. The honourable member for Mitchell and Morden spoke passionately about the closure of banks and branches in her constituency and the impact it's having on elderly and disabled constituents. I want to say that all the contributions across the House were really valuable, but I also wanted to raise a number of additional issues, such as cryptocurrencies. Firstly, I would like to turn to Clause 21 and Clause 22, which brings stable coins and a type of crypto asset into the scope of regulation when used as a form of payment, which, as the Minister has said, will pave the way for the use in the UK as a recognised form of payment. And I know we discussed this morning at the Westminster Hall, Minister, but the recent collapse in the value of crypto assets, including several stable coins, have put millions of UK consumers' savings at risk. The crypto trading platform Gemini has estimated that as many as 1 in 5 people in the UK could have lost money in the crash. Does the Minister agree that the crisis in crypto demonstrates that so-called stable coins are not necessarily stable? How did the recent collapse in the value of cryptocurrencies inform the Treasury's approach to Clause 21 and 22 of this bill? I also hope the Minister can explain why the government has opted to only bring stable coins within the regulations. The EU, for example, just agreed to a comprehensive regime for regulating the entire cryptocurrency industry, while the UK will not even be consulting on a comprehensive regime until later this year. In the absence of a comprehensive regulatory regime, the UK has become a centre for illicit crypto activity, and according to Chain Analysis, a global leader in blockchain research, cryptocurrency-based crimes such as terrorist financing, money laundering, fraud and scams hit a new all-time high in 2021, with illicit activity in the UK estimated to be worth over 500 million, while misleading advertising and marketing of cryptocurrency products is on the rise. It's in the absence of a comprehensive regulatory regime. How will the government crack down on illicit activity and misleading advertising and promotions beyond the regulated stablecoins? Finally, how does the government foresee these regulated stablecoins interacting with the future of central bank digital currency? On financial inclusion, I want to express my disappointment felt on the side of this House that the bill has failed to adequately address financial exclusion. My honourable friend for Hampstead and Kilburn has already touched about the need to address digital exclusion for protecting access to essential face-to-face banking services, and that this bill has failed to promote financial diversity and resilience by removing the regulatory barriers faced by mutuals, building societies and cooperatives. In addition to my honourable friend's important points, I would like to add that the bill does nothing to address the poverty premium, the extra cost poorer people pay for essential services such as insurance, loans and credit cards. And right now, these people are really going to be feeling the impact. We believe that everyone should have access to financial services they need, whether it's saving schemes or insurance, regardless of their income or circumstances. All too often, the most vulnerable in our society are unable to afford or are denied access to financial products and services that meet their needs. If the government is serious about building a strong future for our financial services outside the EU, it should recognise that this bill is an opportunity to rethink our financial resilience, inclusion and wellbeing issues are tackled in the UK. And I hope the Minister will be able to address this in his response shortly. Conclusion, I realise that time is pressing and I want to give the an opportunity to respond to all the issues raised today. So I'll end my remarks by the following. While we support this bill, as it will enable the UK to tailor financial services regulation to meet the needs of our economy, we will be pushing for a bolder and more radical action on a number of areas, including green finance, financial inclusion and economic crime, to make Brexit work for our financial services and a wider economy. Thank you, Mr Deputy Speaker.
Richard Fuller.
Mr Deputy Speaker, with the leave of the House, I would like to speak for a second time. And I'd like to start by thanking honourable and right honourable members for their contributions to the debate. And I welcome, as the honourable lady has just said, the broad support across the House for this bill as presented today. I should say it has been clear through this debate, Mr Deputy Speaker, I'm really a small person standing on the shoulders of two giants who have been responsible for this bill. My honourable friend, the member for Salisbury, and my right honourable friend, the member for Richmond. I will seek to address what I can has been said in the time available. But where I am not able to, I shall write to the colleagues where I feel I can add, where I can add something meaningful. And I also look forward to committee stage where I'll be able to address some more of these points in more detail. As I said when I opened this debate, this is an important and ambitious bill that seizes opportunities afforded by the EU exit to make important reforms to the regulation of financial services. And as the right honourable member for Richmond said, and the honourable member for Salisbury, and my right honourable friend, the member for South Northamptonshire, the resilience of the United Kingdom financial services market as we exit Brexit has been much stronger and much greater than the naysayers said. People, once again, who talk down our country have been proved wrong. There were a number of questions on a number of areas, but I think if I may start with the issues of access to cash, because that was raised on a number of occasions by a number of members. The UK government remains absolutely committed to protecting consumers and supporting inclusion. The impact of bank branch closures should already be understood, considered and mitigated where possible, so that all customers, wherever they live, and especially the most vulnerable, continue to have appropriate access to face-to-face banking services. Meanwhile, innovative shared bank hubs allow customers of participating banks to withdraw and deposit cash and seek support from a representative of their bank in person. And it was very pleasing to hear the contributions from my honourable friend, the member for Cleethorpes, regarding the hub at Barton on Humber, my honourable friend, the member for Mid-Derbyshire, about Belper, and she mentioned particularly the knock-on benefits that a banking hub can have on the high streets, both in Belper and other parts of the country. And from my honourable friend, the member for Prestatyn, and the honourable member for Mitcham and Morden about the importance of financial hubs in their constituencies as well. Those are an important part of access to cash, but the bill also provides the FCA with powers to protect access to cash specifically, where appropriate. The FCA could exercise the powers in this bill to prevent a branch closure, where in doing so it is seeking to ensure reasonable provision of cash access services. This may be the case, for example, if the closure would result in a significant adverse impact in relation to accessing cash in that area. Now, the Government expects such situations to be exceptional and temporary, whilst alternative arrangements to meet cash needs are put in place. But ultimately, that access to cash must and will be protected. The legislation allows the FCA to determine standards to ensure reasonable access to cash access services. In determining reasonable access, the FCA may take into account factors that it considers appropriate. This may include appropriateness of facilities for vulnerable users, including cost, security, hours of availability and accessibility, for example, for disabled people. The FCA is developing its regulatory approach for access to cash and will consult it in due course. Now, as I said earlier, if I may, with honourable time, just go through points. I'll miss out on some of the points she raises if she intervenes again. So,
Could I ask the Minister, does he support free access to cash, yes or no?
I had to come to that. So, as I said earlier, while I cannot give an assurance on free-to-use ATMs, I do expect us to return to this matter in more detail in the committee stage. I tried to write down the number of honourable members and members who use those 4 letters, F, R, E and E, to describe their wish for access to cash. My honourable friend for Blackpool and Cleveland, the honourable member for Cleethorpes, the honourable lady, the member for Kingston-upon-Hull and Heston, the honourable lady for the member for Mid-Derbyshire, the honourable lady, the member for Richmond Park, and the honourable lady, the member for Mitcham and Morden. As I say, we will return to these issues at committee stage, particularly given the level of interest in them. If I can turn to some other matters, Mr. Deputy Speaker, given time. The shadow spokesperson asked about the new secondary objectives for growth and competitiveness and whether they were aimed at advancing the long-term growth in the real economy. And I can say that the secondary growth and competitive objectives will enable the PRA and the FCA to make rule changes to advance the long-term growth and competitiveness of the UK economy, including the financial sectors. The new objectives refer to the UK economy as a whole, including, in particular, the financial services sector. The honourable lady who is in her place, the member for Richmond Park, and the honourable lady for Brighton Pavilion in an intervention, who I don't think is in her place, talked about whether the regulator should have a green objective. I would say that including the net zero target specifically in the regulatory and principles ensures that the government's commitment to reach net zero will be embedded in regulator considerations. Therefore, it is more appropriate to progress by regulators as a regulatory principle, which means they will consider the government's target when they advance their own objectives. And we heard a lot about the government and what they're doing on green finance, which did not pay enough regard to the progress the government has made already on green finance. Let me just list those out. The UK is rated the #1 globally in the Z-Yen Global Green Financial Index. The UK has had the largest green gilt issuance globally. The UK had the first green savings account issued with the National Savings Fund. The UK is the first major economy to implement fully the Task Force for Nature-related Financial Disclosures across both financial services and the real economy. And the UK is the largest donor to multilateral climate investment funds. That is a record this government can be proud of. That's a record this country can be proud of as well. The honourable lady, the member for Kingston-upon-Hull West and Hessel, asked about the have regards for financial inclusion. Now, the government believes that the FCA's current and ongoing initiatives around financial inclusion demonstrate they can already effectively support the government's leadership of this agenda through its additional operational objectives and regulatory principles. The honourable lady, the shadow spokesperson, asked how seriously Parliament should take the speculated proposals to merge the regulators. There are no plans to merge the PRA and the FCA. Again, she asked about the independence of regulators. How can we ensure the continued independence of our regulators? Well, the legislative framework underpinning financial services regulation in the UK provides for the regulators to be independent of government. My honourable friend, the member for Wimbledon, who I think may be in his place, asked about KPIs and whether we could commit to an annual report on the key performance indicators of the regulators. Both regulators, I'm pleased to tell you, will be required to report on their performance against their growth and competitive objectives on an annual basis. This will be similar to the PRA's current reporting requirements for its secondary competition objective. My honourable friend, the member for Wimbledon, also asked about the important issue of CBA panels and whether and what the accountability of the regulators will be. The Government expects that this panel will operate in the same way as other statutory panels, where they appoint external members. Ensuring the right membership of panels is crucial to their success in promoting and challenging a range of expertise. The Chair of the Treasury Select Committee asked an important question about the Bank of England independence. I can tell him and the House that the Chancellor today met the Government, and I refer him and you, and honourable members, to Her Majesty's Treasury's statement on that meeting. The Chancellor affirmed the UK Government's long-standing commitment to the Bank of England's independence and its monetary policy remit. The Chancellor and the Governor agreed that getting inflation under control quickly is central to tackling cost of living challenges. My right honourable friend, the member for Richmond, asked about PRIPS and whether the European regulations on PRIPS will be reformed. Yes, this bill will repeal and retain EU law for PRIPS. He also asked about ring fencing and whether ring fencing will be reformed. The Treasury welcomes the comprehensive set of recommendations for independent panel ring fencing and is committed to publishing a government response later this year. There were many other questions, particularly on MRAs and other issues, and on crypto assets, which I will have to write back given the amount of time that we have. But on the important issue of scams and fraud, which again was an issue raised by many members, regarding fraud prevention, while I acknowledge the seriousness of the issues that we face, I do not accept that the Government and regulators are not taking action to prevent fraud, both in relation to financial services and more widely. The Government is clear that prevention is better than cure, and a multifaceted approach is needed to tackle fraud. The Shadow City Minister asked what we were doing beyond financial services. I'd like to point to the online safety bill, which the Prime Minister committed to in the House today. Mr. Deputy Speaker, there were many, many issues that were also raised that I have not had time to refer to today, but that just indicates the wide breadth and importance of this bill. This bill capitalises on our freedoms outside of the EU by bringing forward an ambitious set of reforms which assert the UK's global leadership in financial services, and I commend it to the House.
The question is that the bill be now read a second time. Mr. Minister, say aye. Aye. No, I think the ayes have it. The ayes have it. Programme motion to be moved formally. The question is as on the order papers. May another please say aye? Aye. No. I think the ayes have it. The ayes have it. Money motion to be moved formally. The question is as on the order papers. May another please say aye? Aye. Contrary no. I think the ayes have it. The ayes have it. Ways and Means motion to be moved formally. The question is as on the order papers. May another please say aye? Aye. Contrary no. I think the ayes have it. The ayes have it.